What's happening? What's happening? What's happening? It's your main man, Derek Bridger from DB Mortgage Group, coming to you live just to tell you exactly why I feel like FHA loans are much, much better than conventional loans. Let's keep it simple. You're purchasing a home, it's going to require a down payment. For the most part, FHA loans require less of a down payment. Now, if a loan goes over the FHA loan limit, then conventional loans are a viable option, but for the most part, FHA loan typically requires a lower down payment, or although there are some conventional loans where you can get through with 3% down. Now, the main advantage when it comes to the down payment is when you're purchasing a multifamily, conventional loans have a 5% minimum down, whereas FHA loans still maintain at that 3.5% threshold. So for me, it's always going to be FHA loans, whether I'm purchasing a single family, a multifamily. To me, as from a down payment perspective, the FHA loan is still the best way to go. FHA loans also have more credit flexibility. As you can see right here, they go down to a minimum of 580 with a 3.5% down, and then we can go all the way down to a 500 with 10% down, where conventional loans typically require a 620. Lower closing costs, and they can be rolled into the loans. That's a little, just depends on how you have your deal structured and set up. So I'm not going to lean too heavily on that one. But the FHA loan is definitely easier to qualify, whereas most conventional loans max out at a 50% debt to income ratio. FHA loans can go all the way up to 56.99%, long as the lender does not have any risk overlay. So let me give you two quick points. The debt to income ratio is basically your debt to the level of your gross income. So, for example, if your gross income is $10,000 a month and your debts are $5,000 a month, including the home purchase, then your DTI is 50. That's it in a nutshell. And while the conventional loan typically caps at about 50, that's 7 extra percentage points that the FHA gives you can be huge depending on what price point you're shopping in. Mortgage insurance. The upfront FHA mortgage insurance premium can be rolled into the loan, and it's typically a little bit lower because, again, insurance is in the case of default, right? And so the one thing that we know is that the government of the United States, to my knowledge, I'm a human being, please forgive me, but the government of the United States has never defaulted on a loan. So since the FHA loan is backed by a government entity, the premiums are typically lower because they're considered less risky. Whereas the conventional loans, you're at the hands of the market and the private sector. And again, I can't think of any first time home buyer grants or any down payment assistance programs that don't work with FHA loans. Some of them may work with conventional, but I can't think of any that don't work with FHA. So it also gives you greater options when it comes to down payment assistance. And again, being that it's backed by the United States government, you have a host of options and it is widely available. Here it is. Keep it simple, nothing to go crazy about right here. FHA loans are better for you if you have credit challenges, if you need flexibility when it comes to the credit scores, and if you need down payment assistance. This is yours truly, Derek Bridges, the down payment doctor, coming to you live from DB Mortgage Group, telling you that I prefer FHA loans over conventional loans every single day and twice on Sunday. Have the most wonderful day.